Good morning, everyone. Today is Monday, April 18th. Hopefully everyone had a good holiday weekend. Before we begin, remember that trading is risky. Let's not trade with funds we cannot afford to lose. Understand there are risks involved with trading. This video is going to focus on two of the methods that we teach here. The software is going to be the Atlas line in yellow and the Trade Scalper, the Trade Scalper signals that you see there listed. So there's a combination of things that I'm going to show you. The first is typically when we have the signals telling us to go long or to buy the market in conjunction with another method, this typically is a good thing. So I'm going to look for a long opportunity here. As you can see, there's a most recent long trade. It's a pullback trade indicated by these P's. That's a great opportunity to go long, and that's the Atlas line. The signals prior to that are the Trade Scalper. 43.92.75, 43.90.75. These are the Trade Scalper signals, and they work differently. These methods are not related. They're unrelated, and that's a good thing. So you're not looking at a combination of moving average systems that are all telling you to go long or to go short. They are unrelated. The methods have nothing to do with each other, and that's really what we want. So my opportunity here is to go long. There's another signal here that just occurred. It's a strength signal, the S's as well. This is all the Atlas line. So I'm going to go ahead and jump in long here. A couple of things we should be aware of as traders. You have a few options to enter into the market.
Order filled.
So you can enter using a market order, which I did. I just went in at market because the price was actually lower than where the S's and the P's happen to be. So for me, a market order guarantees that I just get in. But there is slippage with a market order. You can use a limit order, which means no slippage whatsoever. But with a limit order, it's possible that you're not going to get filled at that price. So a limit order says I want this exact price or nothing. You can also use a stop order. Usually stop orders, they lead you in a direction. So as the market goes up, you want to jump on board at a specific price higher. In this case, I used a market order. And now,
Target filled.
because I got filled at 2 3/4 of a point, it's also important to know why I chose 2 3/4 of a point as a target. If the market is slow, take a smaller target. And if the market is more volatile, take a larger target. So how do we know that? The blue scale at the bottom, the ATR, the average true range, was at 2 3/4 of a point when I placed the trade, which means that my goal, based on the current conditions, is not to make 10 points or 100 points, but at least to make 1 times the ATR. Even if you want to be a little bit more conservative with a tick shy of that, that's fine. But have a goal in mind based on the current conditions. If you have any questions on DayTradeToWin, the Trade Scalper, the Atlas line, or trading in general, visit DayTradeToWin.com, download the free simulator. We have a Get Started guide. We also have a lot of videos and free tutorials on everything trading related with futures markets. My name is John Paul. I'll see you at the next video. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the DayTradeToWin YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.